Welcome back. Well, we do have one company which is in focus. Medi Assist Healthcare is the next management that we're talking to. The profit zoomed around 61% on a year-on-year basis, and the total premium under management jumped by more than 30% to over 19,000 odd crores. To discuss this and more, we have Satish Gidugu, who is the Chief Executive Officer and whole-time director at the company, joining in. Satish, hi, welcome to the show. Well, let's start with the group segment market share, which was up over 200 basis points in FY24. How much does the group business contribute to the overall revenue, and what can we expect in terms of incremental market share in FY25?
Thank you so much. Thank you for having me here. So we've had a great year, both between the same store growth for what we already had, plus the acquisitions that we've concluded, allowed us to move overall our market share by almost 186 bips at the overall health insurance market level. Of course, group has been our mainstay and has grown at almost 33%, which half of it came from the same store growth and half of it came from the acquisitions. And we continue to hope to maintain our market share and the leadership in the group business.
Right. If you could give us a sense of the revenue that you got from government, because that mix has been changing, right? FY21, it was 15.5%, fell to sub 10% in FY23. Now FY24, it's a little over 11%. What are the kind of spreads that you get from the business that comes in from the government? And what's your outlook on revenue? 23 to 25% CAGR that you had guided for stays?
No, thank you for that. On government, I think we've always said that we've always evaluate the opportunities at the government to make sure that they're margin accretive and also cash accretive. And we've been relatively flat, and with the new kind of government schemes coming in, especially with Ayushman Bharat and Pradhan Mantri Jan Arogya Yojana, the quality of government schemes has substantially gone up. So there's a marginal increase in our government business size, but we are largely been around that 10 to 11% on the government side of it. And on the revenue side, I can't comment on what will happen in the future, but I think historically this is the third year where we've grown at a 25% CAGR over 3 years. So, hope to continue that momentum.
No, the reason why I ask you is because when we had spoken during your IPO, you had said that you're looking at around 23 to 25% sort of growth that you have done in the past that may sustain as things pan out in the future. So, which is why I thought I'd put that question.
Absolutely. Thank you for that. And I think we've delivered one more year of that growth. So, hope to continue that momentum.
Okay. All right. Well, we spoke about your group segment. I wanted to actually speak a little bit about your retail segment, where the market share incrementally was up, I think, only around 50 basis points. What is the share of revenue right now when it comes to retail? And again, why was, is 50 basis points in line with what the street, in line with what the company was expecting? And what are you guiding for?
So on retail, I think historically we've been a fairly group-heavy organization. And retail now we work with 14 different insurers on the retail products as well. We have about a 5% market share on the whole. We've grown 30-odd% just in the last year in retail and added a couple of more insurers. So we continue, and retail continues to be a focus, and we continue to see that kind of growth rates on retail. We don't have a revenue split publicly available on group and retail for the simple reason that from an accounting perspective, for every single policy, these are hundreds of thousands, we recognize revenue over 1 by 365. So I think it's best to look at the premium market share and the overall revenue from a corporate and retail perspective.
Right. Just from a business understanding standpoint, I wanted to know the common shaded area between members, payers, and networks is you get a spread from each of the parties here, right? So how should we look at, your revenue growing in line with the growth of claims or gross premiums increasing?
So just as a correction, within the India TPA business, we recognize revenue only from the insurers. No other stakeholder pays us anything in this business. That's also as per the regulation. Of course, that's not true for our international business where others pay us. I think for the India business, it's best to look at us from a market share of the premium service perspective between corporate and retail, and how we are growing our market share vis-a-vis the market gross premiums.
Okay. All right. Well, this is just a larger question. We did have the management of Krishna Institute of Medical Sciences, KIMS, on earlier in the day, and he did indicate that his average revenue per occupied bed has actually risen because of the kind of insurance payer mix, the rise in the insurance payer mix which is taking place. So I just wanted your sense in terms of the incremental or say a 5-year growth chart, just based on the fact that there will probably be much more of insurance penetration, or which hospitals are pushing for at this point in time.
So we continue to be a fairly underpenetrated country from an insurance perspective, right? And I think two ways to look at it. One, clearly our out-of-pocket expenditure as a country continues to be among the highest among our peer countries. So there is an acute need for people to buy and be insured on the health insurance side. The second thing that has happened significantly, especially since COVID, is even in the group segment and retail, the benefits have significantly expanded. People are no longer buying a 1 lakh rupee or a 2 lakh rupee sum insured. There's a significant understanding that the coverage that they need has to be far higher than they have today. So of course, which also improves the affordability, and hence it also translates to your revenue increase for the hospitals, right? But coming back to your question on how insurance should think about it, see, we've historically seen the industry grow at 20% CAGRs. Typically, half of that growth came from inflation adjustments, and half of that growth, came from adding new lives and new premiums. And I think that's been a fairly standard rule of thumb over the years.
You've grown faster than that. Final question before we let you go. You're currently at sub 20% share of the gross premiums that are written. What's your target for FY25?
We hope to continue to maintain our current growth rates and grow faster than the industry.
All right. We will speak to you once the year ends, and we'll speak to you during the quarters as well to get a status check on how that pans out. Thank you for joining in. With that, we'll step into a short break. On the other side, don't miss this conversation with Peter Baines, who's the Group CEO of Biocon, discussing their fourth quarter earnings.